Welcome back to 7-Minute Options. I want to take a quick look at highly directional positions and why they tend to wreak havoc on my daily P&L and why I prefer to avoid them where I can. So let's take a look at Square. Right now I have 3 different positions in Square. They're all highly directional. What I did on 2 of these is on this one, I sold a put credit spread to finance a debit call spread, right? So I really needed to move up. If it moves up, I start making money on the put spread and I start making money on the call spread as well, right? So it's not an iron condor, it's a highly directional position. I have 2 of those on and I have a butterfly on, but the butterfly is way out of the money. And so this really starts to benefit with a big move in Square. Now again, it's a 600 days to expiration kind of position on the butterfly. So I'm really, that's just out there as a YOLO play, but these are highly directional. And I got the same issue going on with SOFI. I did the same thing in SOFI back when it was called IPOE. I sold a 17.5 to 10 put credit spread, right? So taking on $750 of buying power. I used it to finance a 15 to 22.5 call credit spread because I was highly bullish. So this one really worked out for me. I'm super happy about this one. It's at 21.5 today after the rebranding from IPOE to SOFI now that the merger is complete. So this is great. I carried $750 of buying power for, I've had this open for 145 days, right? That's when I sold the put credit spread. So yeah, I mean, I carried $750 for 145 days, and right now I could close this out right now for a $610 gain. So that is a fantastic return. That's what can happen when these highly directional positions go your way. When these highly directional positions don't go your way, then you get what I have here with Square, which is I'm down a lot of money. So on this one here, this is the one that's expiring in 17 days. I'm down $727. So if I were to close this out today, I would have to pay $775 cash to close it out, and I would record a $725 loss. This loss is already priced into my P&L. So if I were to spend $775, you wouldn't see this move because it's already priced in. But it's a pain in the butt. You can see the other ones. I'm up $38 on the other directional position on Square. I'm down $58 on the butterfly, but again, I have 2 years for that to move, so I'm not worried about that. That's going to come back at some point. It's just this one, I ran out of time with 17 days to go, and I don't have a lot of options. All I can do with right now is to wait. My short put here is 240, and you can see here, that would be the 240 line right where my mouse is if I zoom in a little bit. So that's 240 right there. So all I need is just 2 or 3 more strong up days, and this can really go in my favor. But if Square starts moving down again, this minus $700 can easily turn into a minus 950. Minus $950 is the most I can lose on this position. It's $1,000 risk. I collected 50 credit. So you can see how these highly directional positions, the daily market price of these positions changes dramatically as the stock fluctuates, as the underlying fluctuates, and so that's why I get these very large P&Ls. I feel great when it's a large green, and I feel horrible when it's a large red, but that's because I chose directional positions. It's much better to choose delta neutral positions like strangles, iron condors, straddles, butterflies, etc. All right, that's it. Thanks very much.